Can you still make money in the junior mining space? Joining us today is an expert on the topic. Eric Coffin is the editor for HRA Advisories. Eric, good to speak with you again.
Thanks, Daniela.
So Eric, last time we spoke was at the PDAC in Toronto last year, and you explained to me about the PDAC curse where juniors tend to have a pullback right after the event. So here we are exactly 1 month after the event. What are we seeing on the junior mining side?
Well, unfortunately, there's been another PDAC curse. Gold's having a bit of a run now, but you can tell from the way that most of the gold indexes are trading, traders aren't really sold on it yet. And I think it would be fair to say that in the gold space, the junior gold space, the financing window is only open a crack. I think we really need to see the gold price move probably 20, 30 bucks higher and hold it in order to see the money to flow back in. There have not been a lot of financings in the last couple of weeks at all.
But Eric, how much longer can the junior mining space last, given a market that's so unwilling to throw capital into the junior mining space?
Well, I mean, my friends and colleagues, John Kaiser and Brent Cook, are always talking about the 700 or 800 companies that are about to disappear, and they've been about to disappear for about 4 years now. I never underestimate the ability of promoters to hold these companies together, but I think it is fair to say that the number of companies that can actually go out, raise enough money to do meaningful work is probably maybe 200 or 300 out of the 1,000 plus that are floating around right now. So whether the other ones literally disappear in the next few months, I don't know, but I think they become more and more basically they're going to be less of an issue. They'll have less of an impact on the indexes, and they'll just become a non-issue over the next few months, I think. We really need to focus, all of us, on the much smaller subset of companies, and I would say there's roughly 200 or 300 of them with good management groups and good projects. And chasing companies that can't finance just doesn't make any sense right now.
So you're considered one of the best pickers when it comes to mining stocks. And I know in the past you've gone over some of the criteria you look for when selecting a company, but I think it would be beneficial to our viewers if you could just go over some of the things you look for when picking a company to invest in.
There's sort of two ways to go. Well, there's a number of ways, but broadly speaking, there's two ways to go it really depends on your risk tolerance and your preferences. A lot of people right now are trying to find companies that have marginal resources, essentially on the assumption that as commodity prices rise, those marginal resources become less marginal, the company gets more valuable. Those are, in theory at least, safer picks. And I do have a few companies that I follow that have built resources, but I tend to favor companies that aren't marginal. I mean, I'd really rather not just kind of say, okay, I'll pick this. If gold goes to $2,000, it'll do well. I prefer to follow things that make sense now, which has had me sticking by and large to high grade. There's a couple of low grade situations I'm looking at, but they're in areas that have distinct cost advantages, or the deposits themselves, there's something about them that makes them very cost efficient to work on. The other thing is, and this is right now, unfortunately, a much smaller subset, but I think it's important to the survival of the industry that we have people out there actually doing stuff. So for me, a big criterion is simply that they're actually going to be doing something in the next 12 months.
Eric, you're obviously a fan of the exploration companies. Are there any particular areas that you're liking right now?
There's a couple of companies that I follow that will have very high news flow, and there's so few companies working right now that I think glomming onto somebody that's got the ability to generate a lot of news in the next 12 months is going to help quite a bit. One company I follow is called Columbus Gold. They've got about a 4.5 million ounce deposit in Guyana. But what's going to be the big, and there will be news from that, there's a PEA coming, but a big news generator is going to be their Nevada project, East Side. Their VP exploration, Andy Wallace, is fairly famous in Nevada. He and his partners have been behind several discoveries that are now mines. And he's developed what they call a plan of operations down there. This is what you get approved to get your drill permits. His plan of operations is in the order of 250,000 feet of drilling. The guys drank the Kool-Aid. He's talking 250 holes, and normally you just kind of roll your eyes when you hear that, but they are actually funded for it. And with Andy's background, when he says I'm going to go put 250 holes in something, I take it seriously.
Eric, we're seeing the Canadian dollar obviously helping a lot of Canadian gold miners. Could it be the year of the Canadian mining company?
I do think that this year, God knows they haven't delivered it yet. It's been annoying to see some of the financials in the last little while. I was hoping to see slightly better performances from a number of them. Granted, the gold price is weak, but my underlying thesis for this year is that we may yet see one more low in the oil price. And as you probably know, the Canadian dollar is quite correlated to that. So I think there's a good chance that we see, a 75-cent dollar, maybe a sub 75-cent dollar going into the summer. That's a huge boost for these companies. And I think this year will be the year you finally start seeing a turnaround in the profit margins certainly for the Canadian-based producers. They should put up pretty decent numbers this year.
So Eric, to conclude, are we past this bear market? Have the mining companies seen the worst? Or is it still like 2003 where we still have a handful of companies really dragging down the index and keeping it from going higher?
Yeah, 2003 is probably a pretty good analogy. The market as a whole, the broader market is definitely not sold on the idea that gold's going to go higher. That in and of itself doesn't bug me because bull markets almost always start with 99% of the people not believing they've started. That's just how the markets work. My sense is, based on what's happening in the U.S. and Europe, my call from the start of the year has been, although it's going to go lower first, I'm actually expecting a higher euro than we're seeing now by the end of the year. That will help gold prices. There's a pretty strong correlation between gold and the euro. So I think we were probably at the bottom, but I'm not sure we're going to see much in the way of significant liftoff before the end of the year. I think it will be like 2003, where we just kind of slowly drag ourselves out of it.
Well, on that note, thanks so much, Eric.
Thank you very much.
And thanks for watching this edition of Kitco News. Tomorrow, Alex Letourneau will be in studio with his new show, The Rough. That's it for me this week, but I wish you all a very happy Easter and a sweet Passover. See you next week.